Nisha Smith from John Scott Real Estate. Welcome to our Thursday videos. And today we have a special guest for you guys to educate you on loan and pre-approval process. Chris Maxwell from Veterans Lending Group. Hi Chris, how are you doing?
Hey Nisha, good, how are you?
Good, thank you. So most of the time we get so many questions from our clients and the buyers that they have no idea what's pre-qualification and what's the pre-approval. What's the difference actually between pre-qualification, between three, pre-approval and underwriting.
Right, so with a pre-qualification, basically you go online, you fill out an application, you put in your income, you put in your job, how long you've been at your job, and then the computer pulls your credit report and then they spit back to you a qualification letter.
Right.
The qualification letter is pretty inaccurate because you're putting in the numbers. For instance, if you have non-taxable income with VA, you could gross up that income 15%. If you have conventional, you can gross up non-taxable income by 25%. So by doing a pre-qualification, sometimes you're hurting your purchasing power because you don't know exactly how to fill out the income screens.
Right.
The difference between that and a pre-approval is a pre-approval, you actually give all of your documents. So you give them your pay stubs, your W-2s, tax returns, bank statements to a loan officer that's licensed by the state, and then he looks at all of your information and comes up what your amounts are. So that way you're getting a good purchase, your good purchasing power, and you're a solid pre-approval. The next step, what you could do is you could get what's called pre-underwritten.
Okay.
So pre-underwritten, you can go online, you can fill out the application, give your documents to a loan officer. The loan officers can then issue you a pre-approval letter. So while you start looking for houses, they can then submit your file to underwriting. And the underwriter can underwrite your income and your credit and all aspects of your application, so that all you're waiting for at that point is a purchase and sale agreement and an appraisal, and you're good to go. So when you think of the three differences, the biggest thing to think of is risk for the seller. So what kind of risk is the seller going to have by taking your offer? So a pre-qualification, if someone takes your offer with that, it's a really high risk type of qualification. A pre-approval is a much lower risk, and then a pre-underwriting is almost no risk to the seller.
Okay, so what do you recommend for buyers where they should be? Should they get pre-qualified or pre-approved or underwritten in normal cases?
So in most normal cases, I would say pre-approval, especially if you're out looking. So on Thursday, you decide, you meet with a real estate agent says, hey, you need to go talk to a lender, and you already kind of have a house in mind of what you want to get.
Right.
Then you want to talk to the lender, get the application done, give them your documents, get pre-approved as quickly as possible.
Okay.
What a good technique is when you do that with the lender and you get pre-approved, you can also ask them to go ahead and start your pre-underwritten process. So what I do normally is, if I get an application on the weekend, when the agent submits an offer, I'll call the seller agent or the listing agent, and I'll say, hey, I got the offer, it's pre-approved, they're good to go, and tomorrow morning at 9 o'clock, they're going into underwriting, so that way by Tuesday or Wednesday, when they look at the offers, I can call them back and say they're already pre-underwritten. So that has a lot of strength, and it makes your offer a lot more attractive.
And does it also expedite the process?
So in some cases it does expedite the process, because the underwriter is coming back and they're basically giving you all the conditions up front. So they're looking at your file, they're giving you everything you need, like if you have large deposits in your bank account that aren't sourced, they're telling you what all this stuff is, so it cuts a few days out of the process.
Okay.
So generally when we do our underwriting, we call it a fast track underwriter approval. So when we do it, it normally takes us 21 days from contract to close.
Okay. So now there's different kind of programs, and I heard what are the 4 major loan programs out there and which you guys use?
So the ones that we do is VA primarily. We do a lot of VA loans, obviously Veterans Lending Group. You can also do conventional loans, USDA loans, and FHA loans. USDA loans are 0 down loans.
Okay.
You can only use them in certain areas. You can go on the USD.gov website and it'll tell you what areas are USDA approved.
Okay.
Conventional loans, you can do anywhere from 3% down to 20% down. Conventional loans have a little bit higher interest rate than a government loan, but they have less PMI normally. So their PMI is based off credit score.
So since you talked about the PMI and conventional loan, most of the time, the buyers, they think if they are doing conventional loan, they have to have 20% down. Is
Right.
that true?
No. So with conventional loan, if you're a first-time home buyer, you can put 3% down for your down payment.
Mm-hmm.
The thing that you want to try to do with conventional is put 5% down, because at 3% you're considered a little higher risk.
Okay.
So the private mortgage insurance companies will charge a little bit more for private mortgage insurance, whereas if you put down 5%, they'll charge less for PMI, which is also good for your debt-to-income ratio and helps your purchasing power to put down a little bit more money.
Okay, so I've been asked this question before. PMI, does it stay with you throughout the process? For if you got a loan for 30 years, the PMI, is it going to stay with your loan for 30
Right.
years if you did conventional?
Right. So if you do conventional, once you get to 80 or 78% loan to value,
Okay,
the PMI automatically goes away.
okay,
At 80% loan to value, you can call the bank and ask them to get rid of your PMI at that point.
okay.
That's the biggest difference between like USDA and FHA. USDA and FHA, the PMI stays there forever,
Okay.
whereas conventional, it does go away,
So
which is
if,
good.
if someone has the money, then they should do conventional.
Right.
Okay. Now, what's the benefit? Because since we are in Puget Sound and we have a really big military base, what advice do you have for our VA buyers? Because at times I think they don't understand that they can buy a home without any down payment.
Right. So with the VA loan, you can buy a home without a down payment at all. There is no PMI with
Okay.
it, but there is a funding fee. So the first time you use your VA loan, the funding fee is 2.15%.
Okay.
The second time you use it, and any time after that, is 3.3%. And if you have a disability rating of 10% or more as a veteran, then you don't have to pay anything for your funding fee.
That's good to know. So if you have served military, then it will worth actually just going VA loan,
Right.
right?
Right.
Okay.
Plus VA has lower interest rates than conventional,
Mhm.
which makes VA a lot better deal.
Oh, yeah, you can't
Right.
beat that. That's good. So if you are prior military, I think you guys actually, let me tell you, Chris Maxwell, he's a prior military as well.
Yep.
So he does understand the process, and he actually owns a home and he has investment property too. So he's, I think, the best person to walk you through the process as well.
Right.
Now, from this, the another question would be, how can a buyer, when they're looking, how would they know which loan or which program they're approved for?
So the easiest way to figure out what loan you're pre-approved for is just to go talk to a lender.
Okay.
Sit down with them, fill out an application, and have them look over your stuff. A good lender will put you in the best program for you and your finances
Okay.
that gives you the most purchasing power. Because you might get approved for a $300,000 loan if you went FHA versus maybe a conventional loan, which may only get you approved at $270.
Right.
So it just depends on what your financial goals are and what you want your monthly payment to be each month.
Okay. No, that's makes sense. So if someone would like to get pre-approved, where can they contact you
So
to get the information?
right. So if you want to get pre-approved or you want some information about any of the loan programs, you can give me a call at my cell phone number. It's 253-330-6564. I'm available pretty much, I say 24 hours a day because I used to be a first sergeant. But you can get in touch with me most anytime. Normally I call people back within 20 minutes if I don't answer the phone
Okay.
right away.
And we will post Chris Maxwell information right below. Do you have a link that we could post where they can actually go directly and see what, fill out the application as well?
Yep. So the easiest way to do it is go to our website,
Okay.
Veterans Lending Group. You go on there, you can choose your loan officer. Obviously, I'd rather you choose me.
Yeah, of course.
On there is our bios, so you can look at all the times I've PCS and all the things that I've done.
Right.
And on there's a link. Just hit apply now and start the process.
All right, great. Would you mind if I post in our below the video so that they have easy access to?
No, that's fine.
Okay,
Yeah,
great.
no
Thank
issue.
you. Well, hope you guys got the great information about the loan. If you guys have any questions, you can post below, and Chris will be here. We can address your questions directly to Chris. You already have his number, so you can contact him at his cell number as well. We will bring you more good information as well. Thank you so much for coming here, Chris, and educating our clients and the buyers on that. Thank you. Have a good one.
Yeah, you
Take
too.
care. Bye. All right. I will see you guys